Okay, live. Good morning, everybody. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, gents.
Morning, lads. Are we all
Everybody
good?
o- Yeah, very
Yeah.
good. Thank
All
you.
good in the hood. Yes, lovely.
Good. Sun's out, which is good.
Sun's out, guns out. Look at
Oh,
those.
wow.
Boys. Got
Joe
my
Wicks, you got a
Nike
lot to be
Quarantine's
t-shirt
been
thankful
good
on.
for
for.
you.
Yeah, Nike sponsoring me now.
Okay.
They say I'm like a swoosh.
A what? A
A
swoosh?
swoosh. That's a
Oh,
swoosh.
right.
It's a
Okay.
Nike swoosh.
Yeah, get ya. Okay, so any headlines that have caught your eye this morning that you want to start off with?
Well,
Or should we
only
just get straight into some FX analysis?
let's go in and then we can talk about all that bar
Malarkey.
later.
Come on in. Ian, take it away.
So, obviously the first chart that I've got up on the screen is Eurodollar, 6 of them actually, but I'm just going to concentrate on 2. Yesterday we were all in the talking ball yesterday morning. We were talking about the fact that the German Constitutional Court was about to announce whether or not the bond buying from the Bundesbank was justified or no, legal. They've actually turned around and said they would need to stop buying QE bond buying unless they could justify the scheme. But then later on in the day, the EU Commission came out and stated that the EU law has basically jurisdiction, or it's more higher ranking, if you like, than German law. So, in other words, bugger off. We can do what we like.
Is it like uptown top ranking sort of thing?
Yeah. They're
Does anyone know
overall.
that song? Uptown top ranking. No?
No,
Two-tone cigar?
it must be. It's probably before mine and Joe's time, to be fair.
Yeah, it
Yeah, I
sounds like
bet.
it.
Probably.
All right.
Sounds like a wartime
Morning.
song.
I'm only going to look at. I'm going to look at 3 different pairs this morning, but I'm not what I'm going to do for the gun to the head. The gun to the head is going to be New Zealand dollar, but this is. Do you like this?
No.
No.
That's all, well, I mean, yeah, I do like
I'm
it.
trying to work out where it's going.
I like the fact you put the effort in.
Yeah, did all of this morning in between sort of 7 and 8 o'clock. So why we're seeing such mixed volatile trading, because we're in this channel formation basically, and all of these inside legs I've noted as being ABC patterns or free wave patterns, which are predominantly extremely hard to trade. And that's my excuse. That's my excuse for very poor euro dollar performance this month and last month probably. But I think this channel formation base, which is around about here, lining up with this previous base, coming down again in an ABCD, is pretty favourable. But I think, like always, the favoured trade is selling into rallies, not at the market, I think, at the moment. And if we look back to here, this is the 4-hour chart, just on a different outlook. We've got this previous swing low here, and we've got a 61.8% fib here, 109.41. So that's the sort of area, and we've got bespoke resistance at 109.36. So that sort of area is where we'd prefer to get short as opposed to selling the base, basically. And this it's a similar picture for cable. So I think we could see some downward pressure in dollar, the dollar index, the DXY, maybe just running into Friday and then getting a horrendous non-farm payroll figure, and we all go in the other direction again. So basically looking at selling into rallies, euro dollar, sterling dollar, but dollar Swiss gives a slightly different picture. This is a swing high. This is an ascending triangle formation. 261.8% fib here. So trying to get short in dollar Swiss at higher levels today. And not really going to show the rest of them because they're not really close to anything. So that's the FX roundup, apart from the talking, the gun to the head,
Okay.
which we're going to do in a bit.
Lovely. Well done. Steve, you want to take over?
I'll get all my charts ready for that now.
Right. I heard you breathing in the background there, Joe. It's like Darth Vader.
Oh, really?
Yeah.
Oh.
He obviously really liked my reports.
Was he or he was snoring? He's like one of those things when he shuts his eyes, his glasses have eyes in them.
I've got a freeze frame in place instead of a camera, so I could just...
Yeah. You've got to mute the microphone at the same time to make it work, mate.
Right.
We're seeing a nice recovery in oil at the moment. Oil schmoil working its way back up to this resistance level. We'll have resistance around the $30 area, bottom of the cloud, and obviously $35 to $40 area is the gap on the charts. So doesn't seem to be anything slowing that bad boy down at the moment. We're looking to buy dips in that. Copper, just reading a few headlines. Dr. Copper, I've never heard it called Dr. Copper before, appears to have priced in a first stage demand shock caused by the spread of the coronavirus. So we're clawing away back in copper as well. We can see within the cloud, that's normally a time of volatility, and obviously with the Ichimoku cloud, it's an indicator within itself. There's a few signals within the cloud. One of them is to break above the cloud, and that's a time to go long. The other is following these red and blue lines, these nice pretty lines. When they cross over, that's a buy signal as well. But when it's below the cloud, it's not so strong. Blah blah blah. We can talk about that another time. On the gold, again, I keep showing you this gold chart with the arrow pointing down. Not that I'm sort of like negative towards gold. I'm not. I'm very positive towards gold, but there is a potential for a double top if we break below 1660. We've seen indecision over the last few days. We're trading within a triangle. I'll take you to the hourly chart to show you that. And today I'm looking to sell a rally. Again, that's just an intraday preference. Selling a rally when as we look to push up towards this resistance level around about 1712, 1715, but have a tight stop in it. 1722 is the next level after that. Look for it to return to below 1680, 1675, 1680 within this triangle formation. Obviously, if it breaks the triangle formation and breaks this high, the 1740 level, then the medium-term bullish bias returns. Silver, unfortunately, I feel really sorry for silver. That's just the one that's really under pressure. But descending triangle, potentially. Again, I'm selling in front of this trend line today, but a break above it, I'll be positive. Normally what you do is get the run up from the highs, from the lows to the highs, and we break higher once we break this trend line. So that's what that is. News-wise, copper miner Newmont profit surge on the higher production, rise in bullion prices. Yeah, rising bullion prices, I suppose that will help. But obviously we've got the coronavirus, so it's slowed down a little bit. And Dr. Copper, just quite a funny name. Oil, Saudi's oil exports to drop in May as demand slides, funnily enough. And I saw the Texas regulators decided on Tuesday against reducing the state's oil output, a power available to the US state and federal authorities that have been put in the spotlight by spreading job losses during a sharp decline in energy prices. Crude oil prices are trading around about $26 at the moment, down from the $61 at the start of the year, as more than 3 billion people worldwide are in lockdown. So Texas regulators deciding against reducing state's oil output. Might be interesting. Do I have to do the gun to the head now or after?
No, do it after.
Okay, lovely. That's me.
Cool.
Well, Trump wants everyone to go back to work now anyway, doesn't he? It's all over.
I saw that. He said he wants the economy to get started. He said
Hold
people
on,
can't handle it anymore.
You still had the headline talking FX.
Oh, no.
I know. What's going on?
Oh, sorry.
Sack
Can
the
we
juggler.
do it again?
No, I'll never be able to make all that up again.
Right, okay. You're two different shows, wouldn't it?
Yeah, exactly. It's like when you sort of like do a trade idea, you press submit and something goes wrong, and then you start to write the trade idea again, and it's completely the opposite trade idea. Because the market's moved, obviously, not because of making it up.
Yeah, of course. Okay, equities yesterday. So firmer risk conditions yesterday. We saw pretty much across the board. Main Eurozone equities regained some of the ground. That was partially due to Euro weakness that we saw as a result of the German Council that Ian mentioned at the outset. Major stocks in the UK were boosted by firmer oil prices. As we know, BP and Shell are two of the major constituents in the FTSE 100 and have a very big say in what the index does overall because of their weighting. So that helped push the index up yesterday. Although, looking at this chart here, this is the FTSE 100 chart. Let's get that on auto. Why has that changed my levels? Anyway, yesterday we saw a bounce into this underside of this broken channel, which I've been talking about since the start of the week. That also lined up with a 38.2% fib level, and it did a job of keeping the market contained yesterday. The channel is obviously pushed higher, so therefore we're looking for potentially higher levels for another retest of the underside of that channel. And I've lined that up this morning with a 50% fib level from this swing move. So still looking to fade rallies where I can. I still think the underlying effects of the coronavirus on the economy are going to be too much really for the index to really put on any big gains from here, and I think that's the case pretty much across the board with other indices as well. US equities, they made more progress yesterday. This is the Nasdaq. It's continuing to push higher towards these previous swing highs that we saw on the 30th of April, that month end push that we saw on the S&P 500. Not as impressive. That's a more broader index, of course, 500 stocks rather than 100, and not focusing just on technology. That's rallied into this 61.8% retracement level on the 5th of May, so overnight yesterday. Sold off quite aggressively. Looks as though it's going in for another go at it today. But while below 2,900 in the S&P 500, I think there is potential for lower prices. But nothing's happening aggressively at the minute. It's just all fairly sedate, to be totally honest. On the Asian markets yesterday, there was limited gains there. They are still in holiday mode in a few countries over there. I can see the China Shanghai Index reopened after its holidays. I think they had 3 days off.
Yeah, quite a long time, hasn't it?
So that may explain why things have been a little bit slow there in the last few days.
I did read somewhere where they get. Oh, you finished? Oh no, so carry on.
Go on.
I'll finish afterwards. I did read somewhere where China was refunding people who had suffered losses when prices went negative
Oh,
on
really?
the oil. Yeah, weird one.
Okay. Yeah, it is a little bit.
Nice. I
Like
wish
some
someone
sort
would
of
bail me out sometime.
This is the DAX picture today. Again, looking to sell rallies up to that sort of 50% level, or just in front of it, around about 10,800. But I mean, the short-term trend is higher lows at the moment. But so a bit of a counter-trend move there that I'm looking for on an intraday basis. Pretty much rounds up what's going on the equity front. On the corporate highlights, we've got PayPal and General Motors both reporting today in the US to keep an eye out for, and pretty much sums it all up. So I'll leave it there.
Lovely. Nice one.
So now we can talk gun to the head.
Yeah.
Let's have a quick look at our trades from yesterday, just to round those up. So this is our spreadsheet yesterday. Apologies if you're struggling to see that. Let's just zoom in a bit. Yesterday I had that short trade on the FTSE that I just spoke about, bounced off the underside of that broken channel. Closed for a 0.9R win on that. Gold and EuroCAD were both unfortunately stopped out yesterday. So overall, a little bit of a dip in the LP&L, but very manageable, nothing crazy. Still around about the 90% return level since we started recording back in October last year. So, leads us on to today. Who's got some trade ideas for us this morning?
You have.
Go first. Have I?
You've got the honour.
Oh, perfect. Means I can find something now. Under pressure. There was one I prepared earlier. Let me see if I can just find it again. It was Euro Oz. Just having a flick through the charts this morning, it's had a pretty severe sell-off from those swing highs. Well, pretty severe move up and then a severe move down. Seems to have found some support around about the 61.8% fib level, which comes in at 167.90. Possibly a double bottom forming there. We've got a nice hammer candle formed on the second attempt at that level, which may encourage some more buying. So I'm going to have a crack at this today. Going to buy at 1.6815. I'm going to target a move up to 170.48 with a stop loss at 167.73. So just looking for a bit of a bounce in euro versus the Aussie dollar today.
Lovely.
Very short term picture on that.
Yeah.
Okay, who's next?
I'll have a go.
There we go.
Joe's Baskets. So overlaying loads of different, in this case, loads of different New Zealand crosses to highlight a New Zealand basket. So you're basically concentrating on the single currency, not on a currency pair. We've got a previous resistance here. So this is a 4-hour chart. So there is scope for a move to the upside, but I'm looking at trying to get short of New Zealand dollar across a single currency. So going back to these, this is New Zealand dollar against the US dollar. We've got a confluence area here, 78.6%, 61.40 is our bespoke resistance as well. I'm going to come down to sterling New Zealand, possible previous support down here, 78.6% fib here. So they're all got distance to move yet. New Zealand yen, again, selling into rallies. New Zealand Swiss selling into rallies. And then Aussie, New Zealand buying into dips for that New Zealand weakness, if you like. So the one that is the closest at the moment is this one here, which is Euro New Zealand. So the preferred place to buy it would be down here, 177.83, but it is gun to the head. So I've got to do it at current price, which is set 178.56. I've got to keep my stop level below there, 174.40. And I'll leave the target up here because I believe, or I'm hoping for, a head and shoulders. So maybe two left shoulders coming ahead here, coming down right shoulder. So it has a bias to break to the upside out of this neckline. So 4.24R for that call. That's me.
Cool. Steve, there you go.
Yeah, I mean, the only thing really at market I fancy is selling Bitcoin. We're in a bit of a channel at the moment, just on a short-term trade idea for gun to the head today. I'm going to get short at, where is it, 90. The target is, 4.45R. The target is 8,600 and the stop is at 9,200. So 9,200, 8,600 and getting short at 9,090 right now.
Wicked.
Shot. Ooh.
Bitcoin, baby.
Lovely.
Okay. Nicely done.
Is that 140% or something it's recovered, isn't it, from its lows, Bitcoin?
That's it.
Yeah.
But not quite as much as oil.
What's that, about 800% at the moment?
Millions of percent.
double.
When it's zero.
Yeah,
when it's zero and it goes
one.
Google percent, that's what it is. Google percent.
What was it said on my report this morning? It's gone up 400% in so many days or something. Anyway, talk about yourselves.
Okay, so we covered a lot of the news there, didn't we, throughout our chat. The only thing potentially add was the PMI data out of the UK yesterday declined to 13.8 from 36 previously, which is a new record low. And according to the survey, 79% of companies reported a decline in activity for April, and there were severe cash flow constraints at 49% of companies reporting a decline in employment, which declined at the fastest pace in history. So
what
clearly,
caused all that, then?
don't know. And later today we've got the ADP payrolls, which is often a precursor to the non-farm payrolls, which are due out on Friday.
And we won't be here.
And we won't be here, no. Well, we'll be here, but
Hopefully we'll be here.
We're not allowed to go anywhere,
not
are we?
allowed
So
to go
we'll
anywhere,
definitely
but
be
won't
here.
be.
But
I'm certainly
Yeah.
not sitting in front of a screen for
It's
13
fair enough.
hours.
Because Johnson was going to speak on Friday and say, yeah, I'm relaxing lockdown, and then Friday would have just been mental. It would have been like
crazy.
pissed
Well, I
people
heard
all
yesterday
over
they're
the
gonna-
place in the streets.
I heard it was going to be another 3 weeks yesterday.
oh, really?
Oh, did he call you and tell you?
No, I don't know where I heard it. It's probably fake
Yeah,
news.
same as everyone on Twitter, mate. They all hear
Twitter.
things.
In fact, fatality rate's getting quite not low, but it's like under 300 now, isn't it? Well, yesterday.
UK's the worst in Europe, though, isn't it? For death toll. But obviously, takes into
more
account
densely
population.
populated.
Yeah, exactly.
That's all to
and-
do with the Norfolk Arms.
Norfolk Arms. Is
Me
that where?
Been selling takeaway beer up the road, and everyone sits at the wall.
Oh,
Oh,
I
it's
saw. I did see.
Sheffield, the new epicenter.
Yeah.
Yeah, it was
Well,
always
I
was.
tell you what, it
You
was
picked
really
out in the
bad at
early
the
days.
start. Yeah. I was Tracy shopping 4 times a day.
Yeah, spreading it around, flaunting it around.
Okay, so data today: UK construction PMI at 9:30. We've then got Eurozone retail sales at 10. ADP at 1:15, and then crude inventories at 3:30. So plenty
Crude
to
inventories, yes.
plenty
Come
to
on,
keep an eye out
let's
for.
see. Let's see what happens.
Yeah, lovely. Okay, I think that's pretty much everything. So we can call it a day there. Good luck with your trades.
I'm
Yeah, good luck,
exhausted.
lads.
Shall
That was
be back
20 minutes
tomorrow.
long. Yeah, you got to be in it to win it. I forgot to say that yesterday. That's why I lost. The last 2 days I haven't said it. You've got to be in it to win
You
it.
do have to be in it to win it. You're right. Right. Good luck, gents.
Have a good
See ya.
one.
See you
Cheers.
tomorrow.
Cheers.